Hey everyone, welcome to Primary Market Chatter, June 3rd week episode brought to you by Sunday Investing. So I know that we hadn't done a space last week, but that was also because just though he SMEs and from what we have seen, the general feedback, they are not super interested about SMEs. Plus, when there's a main board issue, it just kind of works different. So we wanted to wait for that, and now that there is a main board issue in as well, so we wanted to kind of do a space where we cover the IPOs. Next week, na total 8 IPOs हैं जो close हो रहे हैं. Six of which are SMEs and there are two main board. What we will be doing is we'll cover four of them today and four of them tomorrow. This is a slight departure from what we had where we were covering six today, but Yash would probably not be able to make it today. Tanmay would also be in and out. So majorly it would be Rohit and me will be talking about most of the IPOs. So आज उस हिसाब से cover करेंगे. So what we'll do is today, we will cover two main boards as we had promised. Oswal and Aris Infra. Oswal comes Aris Infra, and then we'll also speak about two SMEs which are very hot. So we'll talk about Monolithic and we'll also talk about Influx Health. So it just kind of happens to be in such a way that we are covering some good issues today, and then there are some issues for tomorrow as well, which would see interest like Appleton and Patil Engineering. So we'll see when we come to that. But yeah, definitely interesting. It's going to be an interesting episode. Before we start, I just have a couple of housekeeping items. अगर आपने अभी तक हमारा YouTube चैनल ज्वाइन नहीं किया है तो लिंक इज इन द पिन्ड कमेंट्स. डेफिनेटली ज्वाइन द YouTube channel for following up. What we'll do is we'll also put that space there, put the space there so that you can listen to these IPO reviews at your own leisure according to whatever time works for you. Second, we are not SEBI registered research analyst, so do not take any of our opinion as a qualified opinion. This is not a apply or a not apply recommendation. This is majorly just like our opinion and can definitely vary. So definitely keep that in mind as well. And definitely do your own self-study slash make sure that you are talking to a SEBI registered financial research analyst in order to take a decision, but do not just do whatever we are planning to do. But having said that, this can give you a rough idea in terms of like what the company does, and just what we try and do is we put in our unbiased review of companies without looking at the GMPs as such. Having said that, we can now get started. I'll just set the order for the day. सबसे पहले मोनोलिथिक इंडिया की बात करेंगे, the IPO for which is closing tomorrow. Then we'll speak about Oswal Comms, the IPO for which is closing day after tomorrow, and then we'll speak about Aris Infra and then follow it up with Influx Health. So it's going to be a smallish slash episode. We'll try and wrap everything up by 9:15, but we'll see how it goes. So we will start with Monolithic India. Maybe I will set it up for Rohit to talk about Monolithic. Incorporated in 2018, the company manufactures and supplies specialized ramming mass, a heat insulation refractory material used in iron and steel industry induction furnaces. Ramming mass क्या होता है? I will be very frank, मेरे को 10 दिन तक पता नहीं था, but I have became a proclaimed SME in most ramming masses and how it is used in the last 10 days by listening to all of the people and all the chatter. Tanmay has also spoken about this quite a bit, this company quite a bit. The company's major customers are iron and steel producers in eastern India, primarily in West Bengal, Jharkhand and Odisha. Just setting up the IPO, it's a 82 crores IPO, 82 crore ka IPO, all of which is a fresh issue. The company is bringing its IPO at a market cap of 310 crores. So, लगभग 26% type का dilute कर रहे हैं, which is 862432. Yeah, it's diluting somewhere around 26.5%, which is the bare minimum. In terms of the FY25 financials, the company had done a revenue of 97.5 crores. 97.5 crores का उनका top line है. PAT है 14.5 crores का. So if I divide 310 by 14.5, it's coming at something like 22 P, which might seem high compared to how we are used to seeing some of the other SME races. But there is a story behind it. At least peer comparison, this company looks really well. We'll try and understand how it is placed compared to its peers. But yeah, more when Rohit talks about it. In terms of the LM is Hame Securities. तो उसके साथ over to you, Rohit. You can speak about Monolithic.
Thanks, Manish. I hope I'm clear and audible.
Yes.
Okay. Yeah. So, and I hope I'm not too rusty because it feels like it's been a while. I wasn't there the last time we did this also because I was on leave. But I'll cover, so the name monolithic or monolithisch, honestly, I don't know exactly how it is pronounced, but it comes from the word monolith, which is a technical term, in the refractory material business, where you have two types of refractory materials. You have shaped and unshaped. Shaped is where you make it in the form of, say, bricks or pellets, some kind of physical shape. And the other kind, which is unshaped, is where you make something that's more like a putty, something which will be applied and just, pressed against a wall. So Monolithisch very clearly is a business in this second kind of refractory material. The one that they deal in primarily is called ramming mass. So this is, like I said, an unshaped refractory material, and they use it mainly to line induction furnaces. So induction furnaces is one of the three types of furnaces used in making steel. So you can make steel using a blast furnace, an electric arc furnace, or an induction furnace. And induction furnaces are special because they are mainly used for making secondary steel. Secondary steel is steel that is made from scrap iron, scrap steel, and so on. The main advantage of this is that this is considered to me a much more profitable business compared to, making steel from raw iron, which is what you use a blast iron furnace for. So what is happening, or what is interesting about this, is that most new steel capex in India is for the secondary steel. Like I said, because the economics are better. In the primary, which is your BOF, that blast furnace type, there you actually use shaped refractories, whereas in this induction furnace type, you use these unshaped refractories or this ramming mass. And I think the thing that is probably most relevant is that new capex is coming in this segment, which is why this is considered to be a faster growing part of the market. So I hope that gives some sort of background to what this is. And the idea is that this lines the inside of the furnace and is the point where the molten metal will come into contact otherwise with the, body of the furnace. And this prevents that molten metal from touching the furnace, this thing. So what these guys do is they manufacture ramming mass of various grades. I'll not get into the technicalities, but they mainly sell about 70-75% of the business is from high grade products. Ramming mass is made from two components. The main thing is silica, which comes from silica stone or silica rock. And the other small bit, I think, is boric acid, but that's a very, very small part of it. What we understand, and this is, and I don't know if Tanmay has come on yet, but there's something that Tanmay has understood from actually meeting the management. But our understanding is that the silica that you get, or silica rock that you get in East India, which is where Monolithisch is based out of, is of a higher purity, and that allows it to, withstand higher temperatures. So that gives Monolith a very specific benefit, for the product that they make, just because of where they source their material from. One thing that's important to remember here is that logistics is a very large component of this business, because these silica rocks are these large, multi 2-3 ton rocks. Even the output material, which is the ramming mass, is also very, very large. It's transported in these huge gunny bags. So these are bulk products. And if you see from Monolith itself in their P&L, 16% of their revenue, which is 16%, is just their logistics costs. So being located at the consumption belt, as well as being located where the raw material is sourced, is actually a big competitive advantage. So this company is located exactly where a lot of the new capex for secondary steel is coming up, which is in this Jharkhand, Ranchi kind of belt. So these guys are located in the border, I think, between Jharkhand and West Bengal. Today, this is not a very large market overall. This ramming mass, just from market size, is about a 900,000 crore market in India. And Monolithic today has about 11% odd market share. There are broadly two players here. There is Raghav, which is a peer, which I'll come to later. And there is Mono, and there is one more smaller player. And these together make, I think, 45-50% of the overall market. Raghav is double the size of Mono. This company also has another group company that does some ramming mass. So, of course, that is not attached to this listed entity, but together I would say they probably have 16-17%-ish of the market. Again, one interesting thing is Mineral India, which is the parent company, is itself a very large entity. They have multiple, like we pulled together some of their main entities, ROC data, and you can see that they have multiple 200, 300 crore businesses generating anywhere from 10 to 30 crore PAT. So clearly the promoters are rich. They're very well connected in the ecosystem. And there are some other large entities, some large mining private, not publicly listed mining companies, like, multi-lakh crore mining companies that are customers and interested parties in this IPO is what I can say. Overall, this company is coming with about a 130,000 metric ton capacity. They are raising funds to increase their capacity. For the first step is their own entity. They're increasing, they're roughly doubling the capacity. And you can say they will double further to around 420,000 metric tons with the subsidiaries capex. So this is not given in the RFP, but again, we understand this from talking to the management. The company did almost 100 crore, 97, 98 crore top line, very good margins, 15% PAT, very solid growth. I can expect that this company can do 140 to 150 crore top line for next year. That is for FY26. They've indicated slightly higher numbers from working capital, but my sense is they will do around 140, 150 crore, which should be around 22, 23 crore kind of PAT. The balance sheet is also very good. You can see that there are no receivables over 6 months. You can see the increase in their assets, their property, plant, and equipment also increasing very sharply. They are actually one of the rare cash flow positive SME businesses. So clearly this company has figured out a niche in the market, and they are a very, very significant, sizable player in this particular, of course, niche business. So coming to the valuations, it is coming at around 21.5 times FY25. But I would say maybe closer to 13, 14 times FY26, which is very cheap for a refractory business. Now, look at that. So there are two ways I looked at this. One is there is a direct peer called Raghav Productivity. This company trades at 85, 90 times, which is honestly a ridiculous number. I don't know why a business like this should trade at those numbers. But this is a very cornered stock, and it is a stock that is held by a lot of ace investors. So there is a chance that that is one of the reasons. They also claim quite a few things. They claim that they have a lot of R&D. They claim that their products are so unique and make a lot of, productivity gains for whoever their end clients are, that they're able to sit in Rajasthan and sell, globally and so on. It's possible. But still, why it should trade at 90 times, I don't know. But if you look at there are a bunch of other refractory businesses in the shaped refractory segment. So like I said, these guys do unshaped refractory, which is ramming mass. There are a lot of shaped refractory businesses as well in Mainboard. And these are businesses that are hardly growing. They might be growing at 5, 10%, 2, 3%, whatever in the last year. Every one of them trades at 40x plus. There's Vesuvius, there is IGFL refractories. There are a bunch of them, and they all trade at fairly high multiples. The anchor book here is also decent. I saw Mukul Agarwal's fund there. There are definitely some flippers, so it's a bit of a mixed bag. But just if you leave that aside, I think this is coming at 21, 22 times. In fact, there was one refractory shapes, which was a very hot IPO when it came after listing and went up to a crazy number. Now it trades around 20, 21 times. That's lost a little bit of steam, I feel, because maybe the numbers in H2 were a bit lower than people thought. But even with that, it trades at 21, 22 times. So I don't think 21 times is off for a refractory business. Clearly, the segment, people value it at higher. I can see this company getting 25, 26 times. It's not very expensive on FY26 basis. They've kind of monopolized this segment. They're very good with the secondary steel business, which is their sort of specialty and focus. So given that this is a 4x capacity jump, I think the market will be interested. So I am quite excited about this. I hope it doesn't list too high, because anyway, getting allotment is tough, but we'll definitely apply. And if it doesn't list too high, I will certainly be a buyer.
Perfect. Long time since you have spoken about some of the companies. So yeah, comments also say that we miss listening to Rohit, kind of echo the segment. But yeah, I definitely agree with you on a lot of pointers. Very well covered review. A couple of pointers from my end. जो promoter con call हुई थी, I had heard that was also pretty good. The promoters knew their business very, very well. Like they were very technical. They said, and this is a question maybe for you as well, and I'll just preface it by saying that a lot of people say that Raghav's products are like specialized while my products are commodity. He said that that's not the case. if there was a product which would have improved the efficiency or the productivity by 15%, then literally nobody in this market will have even 0.1% market share. Everything would be 100% would be to that specific player. So that's what he said. But do you agree, or you think that we'll have to take that statement on face value for now? At least the market share data is also supporting what he's saying.
Yeah. So I think, see, it is a mix of things. Unfortunately, none of us are absolute experts in this, and we're not overnight going to know the technical differences between ramming mass of, one guy sitting in Jaipur and one guy sitting in Jharkhand, sitting at our respective homes in Bangalore and Bhopal. So, very tough. As investors, we have to go with the information we have. I have listened to the interview of the Raghav guy also, and his claims are a little bombastic. To be fair, like he says 20, 25, not even 15. I think he gave 20 or 25% as the and he said that is they make some 7 to 10% increase in bottom line because of this, which again made no sense to me. It was a little too over the top. I felt that what this guy is saying, what the mono promoters are saying, is a lot more measured. Plus, I think some of these businesses are also dependent on relationships, dependent on your sort of region that you have a stronghold in. Raghav sitting in Jaipur will have trouble, shipping products from Jaipur to, say, Kolkata, West Bengal, or wherever it is, say Ranchi and Raipur and so on. So it's not that straightforward. Plus, we've got to go with the information that we have. And I think if people have to take their call, who they are more convinced by. Right now, I feel the opportunity is still in something like a mono. Raghav is at 90 times. When it will, whether it will actually give a return, I don't know. Whereas mono is coming at a much more reasonable valuation with a clear, solid business and numbers backing it. So, I do have to agree that if he says no one will have 0.1 market, this company cannot be sort of tripling growth in 2 years if their products are inferior. So, I feel reasonably confident with what I understand of this company.
Got it. Can you also touch upon कि इनका capex कब आएगा, कब live होगा, and दो अलग capex हैं, right? From my understanding, एक जो है वो same unit में, एक इनकी subsidy में है. Can you touch upon that one? In the meanwhile, if anyone has any questions with respect to Monolithic, please do type them in the chat. We'll definitely try and answer if we know it.
Yeah. So the first one is supposed to come by September. In the RHP, I think they say by August everything will be set up. So let's say it will be live in September. So you may not see a big increase in H1 because of that. The second capex is supposed to come by basically you can say starting by March 26, which is maybe starting of FY27. So it will probably have an effect in FY27. But once the first capex comes live, it's already doubling or nearly doubling the capacity. So even if it's unlikely that they will fully utilize it in the first year. The second capacity is a greenfield capex coming for their subsidiary. I think they're doing that for some tax benefits. Well, the first one is a brownfield, which is already ongoing and should come live in a couple of months, in say 3 months.
Got it. And then there's one last thing from my side which I want to clarify. कई सारे लोगों ने बोला कि ये West Bengal based company है. So the general perception towards West Bengal based company is not super kind, for the lack of a better word, if I may say so, but definitely want to highlight that the company's management is based out of Jharkhand, Ranchi, and then the company is based out of Purulia, West Bengal, and not Kolkata. And Purulia is right on the borders of Jharkhand and West Bengal. So it just happens to be in that area. And this is the area where, as Rohit said, most of the capex is coming for these refractories and steel plants per se. So definitely a different kind of play. I would also be applying in this IPO. I really hope that the subscription remains low because of the voting. That's the only positive we can say in the current scenario. But yeah, I'll be applying. That is our review of Monolithic. If there are no questions, we can probably go and move forward to the next issue. Unless Rohit, you have anything to add from here?
No, nothing more. I think we've covered it in detail.
Perfect. So moving forward to the next company, we'll talk about Oswal Pumps. Just setting up the company for myself. The company started in 2003 and is a manufacturer and distributor of pumps catering to domestic, agricultural, and industrial applications, including solar pumps, submersible pumps, etc. It has executed delivery of 26,000 plus solar pumps under the PM Kusum Yojana. Just setting up the IPO, it's a 1,400 crores raise out of which 890 is a fresh issue. So 1387 crores कंपनी रेज कर रही है, 890 crores का फ्रेश इशू है और लगभग 387 480 497 500 करोड़ रुपए टाइप का कंपनी ओएफएस कर रही है, which is going into the promoters pocket and 890 crores are being used into grow the company. We'll talk about how it will be used. In terms of the market cap, the company is coming at a market cap of 7,000 crores. So like they are diluting close to say 22% of the company, 20 to 23% of the company. In terms of and then they have also done a secondary sale right before IPO as well, where promoters have cashed out another 308 crores. So overall, they have reduced their stake by let's say 30%, a meaningful stake, and now will have 70% stake. अगर FY24 फाइनेंशियल्स की बात करें, so again FY25 का इसका पूरा फाइनेंशियल अवेलेबल नहीं है, 9 months का ही अवेलेबल. We'll talk about it when we come to it. But for the full year financials, FY24 it's at 761 crores का टॉप लाइन किया था इसने, and 98 crores का bottom line किया था. So just on FY24 numbers, the company is at 70p, which is too high. But then it's like a fastest growing solar pump company. So the number has shrank quite a bit. We'll talk about it. In terms of the LM is IAFL, Axis, CLSA, JM, and WAMA. So that's about the company. Just talking about the company at a very high level now. So Oswal Pumps, as I said, is essentially the India's largest growing vertically integrated solar pump company, and has been growing in the last 2-3 years pretty well. But it's an old company. It was started in 2002 and then commenced its operation in 2003, and then has been growing at a single digit rate per se until PM Kusum Yojana kind of kicked in. But before that, just highlighting what they used to do. So from 2003, they started manufacturing these low speed monoblock pumps, which are your submersible pumps, and then over time moved to manufacture high speed pumps, monoblock pumps, some grid connected pumps, which are your solar grid connected pumps, etc. And moved into the PM Kusum Yojana. In 2019, when the Kusum Yojana started, which essentially said that around 14 lakhs pump लगाएंगे हम in India to places which are not connected to the grid, and majorly in agricultural places, to reduce the consumption of diesel. So this company, along with a couple more companies, was the major beneficiary of it, and we have seen that the revenue has kind of increased drastically over the last 3-4 years once this PM Kusum Yojana has kind of came into effect and has started. The rollout of the scheme has started happening at a much more faster pace. So that's where the company has started growing pretty well, which is clear from the revenue angle as well. So if I talk about the company's financials, in FY23, they did 387 crores of top line. PAT was 35 crores. FY24 में वो number double हो गया. They did 761 crores, and PAT was also 100 crores. And in these 9 months, they have done 1,067 crores, and PAT is 216 crores. So everything on the face of it looks great, right? आप देखोगे कि FY23 से FY25 तक, because if you look at 9 महीने का जो data दिया हुआ है, they've done 1,067 crores top line, right? So if you just project it to 12 months, they are slated to do somewhere around 1,400 crores in top line and a bottom line of somewhere around 285 crores, which looks great, right? Because you're seeing that the company is growing tangentially at let's say 100% YOY, at least for the last 3 years. But just want to highlight that it is majorly because of PM Kusum Yojana. Their 87% of their current revenue comes from PM Kusum Yojana. And this scheme is slotted to end on 31st of March 2026, at least according to what it is said. There's a very high likelihood that this scheme would be restarted by the government in some shape or form. मैं इस पे समझ रहा था. I was trying to listen to an interview. It said that there are three parts of that scheme: A, B, and C. And like the goal is to reach 14 lakh of submersible pumps. They are somewhere around 8. A lot of portions would be covered by FY26. So the scheme may change in some way, shape, or form, but will continue. So even if we, let's say, assume that the scheme continues and kind of value, then the numbers at least start making some sense. In terms of like just talking back about what they are planning to do with the raise, like जैसा मैंने बताया कि 1387 crores का IPO है, जिसमें से 497 crores OFS है, 890 crores का fresh issue है. So जो 890 crores है, उसमें से ये 311 crores का ये debt है इन पे, which they will pay back. So that should directly boost the bottom line. 30 crore का तो I think these or like some number like that would directly add up to the bottom line because the company would not have to incur the interest cost. तो 900 में से 300 करोड़ वहां चला गया. Another 300 crore they are using to set up capex. तो बेसिकली ये क्या कर रहे हैं कि अपने आप को बैकवर्ड इंटीग्रेट कर रहे हैं वेयर नाउ दे आर सेटिंग अप एल्यूमिनियम फ्रेम फैसिलिटी, 1.5 गीगावाट की सोलर मॉड्यूल फैसिलिटी एंड देन 1.5 गीगावाट की ईवीए एनकैप्सुलेंट फैसिलिटी. तो इससे क्या होगा कि ये जो ग्रिड पे ये जो सोलर मॉड्यूल लगाते हैं ये भी ये खुद ही बना पाएंगे, विच honestly I feel they are slightly late entrant into it. Like from what I was reading, they already make some of the solar modules right now, but they are funding another capex facility in order to do that, and then they like उसमें 300 चले जाएंगे तो बाकी 300 बचे, जिसमें से 90 crore is towards funding or purchase of new machinery, automation and modernization, and then there is a GCP, general corporate purposes expense of 216 crores. From my rough read, I felt that solar modules, because they are a laggard entrant in it, and like this is not their core specialty. Their core specialty is manufacturing solar pumps, like pumps, and then kind of connecting it with the grid, connecting it with the module per se. So that seems slightly ambitious to me in terms of how it will play, because end of the day, I feel module is a commodity product. So if not now, probably 2 years, 3 years down the line, उसकी जो valuations अभी मिलती हैं companies को वो उतनी high नहीं मिलेंगी. There will be a few leaders who will probably be on the top of the value chain and will evolve using R&D, probably move to cell manufacturing, etc., and hence will always command a better premium. But people who are towards the lower end of the bottom of the food chain and are, let's say, just value chain and are just assembling the solar modules, they will find it very difficult, right? Because end of the day, आप A company का खरीदो या B company का खरीदो, it doesn't impact a lot, right? So having said that, that solar module facility in itself felt slightly off to me, but if I, let's say, assume that just like they are able to work towards that, the company in itself majorly does solar pumps and it is able to continue with one more risk, which is कि जो PM Kusum scheme है, no tinkering happens to it as well and the company can grow. Then there is good future for this, and this is something which is very clearly identified through the peer of this company in the market as well, because Shakti Pump, who is a direct peer and does solar pumps, has done extremely well over the last 3 years in terms of markets. But Shakti Pump also right now is somewhere around 28 PE, which is like this company is also coming very close to that. Like अगर हम एक बार financials की बात करें, तो in terms of FY25, as I had said, they will do somewhere around 40, somewhere around they have done 215 till now, so they'll do somewhere around 300 something sort of a number. और उसके basis पे देखोगे तो ये FY25 annualized number पे लगभग 24 PE पे आ रहा है, which like if I look at Shakti Pumps, it is available at 28 PE. तो बहुत ज्यादा स्कोप नहीं छोड़ा है like in terms of the nearest peer. And I'll be very frank, like Shakti Pump also does government schemes, but इसका dependence थोड़ा कम है इससे. So that is better. Like Shakti Pump should probably command slight premium क्योंकि वो export भी करता है. इनका export is bare minimum. So because of which I feel that gain possibility is slightly lesser, and that's something which we have seen with the GMP as well. It has been very volatile where the market hasn't been able to figure out where to place this. I think the same will happen with the stock as well, where it will take some time, move up and down and up and down, and then probably come to a slight discount to Shakti. That is what my idea is. But essentially, they'll trade at somewhere along the same numbers because again, the risk of PM Kusum scheme kind of like is with both of these companies in the same way. But having said that, there is a big government push uh, to include solar pumps and to put in a lot more solar pumps and reduce diesel consumption wherever possible. So this should do well in the temporary, in the short term. One thing which I also saw was that the anchor book was brilliant. Like I wasn't expecting this good of an anchor book. Like small cap world fund, which is Capital Group, took like 36% of all anchor, which is like 150 CR का वो जो रेस था वो ले गए. So which was good, which gives a good sign. But again, I am somehow very conflicted in terms of like I would have liked for the company to have came in slightly better pricing, or essentially if there was not a lot of history behind the company where it had grown at single digit numbers. Like I'm somehow not sure. It just feels that it just happens to be at the right place at the right time where everything's working for the company and they are in with the IPO. And I'm not able to see how that will evolve. Now I understand कि आगे तुम बहुत ज्यादा देख नहीं पाते हो, but if something comes and the company is able to change that, maybe we can like always invest then at that moment of time. But in the current scenario, I feel that they have left some scope on the table, probably not enough in terms of like, will there be listing gains? Will there be not be listing gains? Nobody knows because the market, at least the primary markets have been completely off in terms of like how people are reading them. Leela, Ages, all of them didn't list well. And then the SMEs also, like I remember a few SMEs which were at 90% premium listed at like 25%. So it's very difficult to say, but the general theme is that the market isn't giving primary issues that big of a listing gain or that as much it used to earlier. So I'm very reluctant to commit whether it will get a listing gain or not. But in the short term, it should do decentish is what my read is. That is what I had to share on Oswal pumps. Over to you, Rohit, to add anything that you feel I have missed.
Not much to add, Manish. I think just one thing is Shakti Pumps 10 days back was trading at 25 times. And once Oswal Pumps IPO came, it quickly ran up by 10-15%, and now it's stabilized around 28, 29. Somehow I feel that's the market saying that if Oswal is at 24, 25, then Shakti should be at 28, 29. As opposed to saying that Oswal should now suddenly give a 10-15% pop. So that is my read of that. So I am actually not expecting too much of a gain from Oswal. I have not studied this issue too much. I'm just reading into the price action of Shakti. But otherwise, I think broadly it looks like one of those segments. I've also initially, I also was a shareholder in small shareholder in Shakti Pumps with like a few lakhs, and I exited because I also felt that this is one of those one trick pony kind of companies, very dependent on a single scheme. And I think that is the reason it doesn't get the kind of premium a company that is growing so fast would otherwise get. So yeah, overall, I think it's an okay price. Maybe can give a small gain, may not give any gain either. And the price action Shakti Pump kind of gives me a sense that it won't give much of a gain.
That's a good point. Like, as I had also said, right, like, Shakti feels like a slightly better, like slightly higher capability wise, and also because they have been in the market, so market kind of, like values reliability and whatever management has said slightly more compared to primary issues. But yeah, that is what our read is of Oswal pumps. My question to you, Rohit, is would you be applying or would you be completely skipping?
Yeah, I am stuck with
Or you,
ICICI Bank. 4 of my accounts
oh,
are in ICICI Bank, so I can't even apply. It's damn stupid. But until they resolve this asthma issue, I'm stuck.
got it. Okay. I would probably apply a few SHNIs here. I somehow think the discount listing, no, I don't want to say, but in the short term, I think there should be some movement here and there. So not very excited about Oswal, but it's just one of those issues which is at like 20% discount to more capable peer per se. So that is what our review is with Oswal Pumps. With that, we'll move forward and talk about the third company for the day, which is Aris Infra Solutions. Before I start, if you haven't joined our YouTube channel and are listening to us for the first time, please do go ahead and subscribe to the YouTube channel as well. We'll put this space there as well. So if you missed something, definitely you can listen to these companies later as well. Having said that, let me set up Aris Infra. So Aris Infra is a modern platform that helps construction and infrastructure companies buy materials easily and manage their finances smartly. It's a B2B technology driven company in construction material and deals in GI pipe, MS wire, MS TMT bar, OPC bulk. तो बेसिकली जो ये सीमेंट वगैरह होता है, ईट होती है, सरिया होती है, आई एम अज्यूमिंग इट काइंड ऑफ इज अ B2B player for supplying these smartly to construction and infrastructure companies, because there is a lot of construction like infra push in the country. So this is like a direct beneficiary of that, and is bringing its IPO right now. In terms of the IPO, it's a 500 crore IPO, all of which is a fresh issue. Company 500 crore का IPO कर रही है. Market cap है 1800 crore रुपए. And so they are diluting like close to again 28-29%. In terms of the FY24 financials, FY25 is when they turn profitable, but वो पूरा नहीं available था. So I put in FY24. Their revenue was 700 crores और PAT जो था वो negative 17 crores था. So they made a loss of 17 crores. So calculating P is not an option for now. FY25 के basis पे I'm assuming Rohit, you will do that. In terms of the LM is JM, IAFM, and Wama. So with that, over to you, Rohit, to talk about Aris Infra.
Sure, I'll cover this one somewhat quickly. So what Aris Infra does is they are a B2B, they say technology-enabled company. So they operate in this construction materials market, which I think is actually a very interesting space. It's one of those last to digitize markets, wherever you see globally also. And what they do is they try to digitize that whole procurement process for construction materials and what they think will add efficiency in this process. So what do they do actually? So they do two things. One is they run the operations. So imagine you are a Afcons or an L&D or whatever, right? Let's say Afcons, let's take Afcons because they are a client of this company. They want to procure, they have an EPC project somewhere and they want to procure concrete and steel and whatever, the materials that they will use to actually build their road or the infrastructure that they're working on. They then need to source the material, for which they could either use existing vendors and manage the whole thing, or they can use somebody like an Aris Infra to manage the whole thing for them. So they will so Aris Infra actually runs the entire operations. I'll come to the technology in a moment, but they actually run the operations on behalf of, say, an Afcon. So they will reach out to a bunch of vendors. They will get the quotes. They will sort of put their margin in between, figure out all the logistics. They'll actually do the logistics and so on. The other thing that they do is the technology that they say they have developed to streamline all of this for themselves. So they are running the ops. Now, if they run the ops like any other mom and pop shop, it will ultimately just be as inefficient as ever. But they are saying that they have developed certain technology that allows them to, for example, generate an RFP and or an RFQ and put it out to a whole bunch of vendors. The vendors have kind of like a messaging platform in which they can submit their quotes. These guys can then take those quotes. They will use whatever technology, AI, whatever buzzwords you can think of, and ultimately aggregate and say, okay, these are the best quotes, which they'll send it back, using this platform to the end customer. Let's say Afcons in this case. Once Afcons approves it, then again, once and say that, okay, we want to take from XYZ vendor, these guys will manage that whole process. They'll manage the delivery. They'll manage whatever technology is needed for that. They'll manage all the paperwork and billing digitally. So all the documents will be digital rather than physical. So that is the piece that they're doing on the technology side. But at its core, actually, this is still a very execution heavy business. And you can kind of see that in the way they, manage the numbers also. They actually are responsible for the material that is being delivered. So the revenue that flows through them, unlike, let's just take a Zomato, right, which is actually a true platform where they only recognize their service fee and that platform fee in the middle, these guys actually recognize the revenue of the products that are being bought and sold. So if Afcons needs 1,000 crore of steel, this company will actually buy 1,000 crore of steel or concrete or whatever, take a little margin on it, but recognize 1,100 crore as revenue and 1,000 crore as cost. So this is a fairly operationally heavy, working capital heavy kind of business. I would say the technology elements are more internal as opposed to external, and it will help them do it better than any other local, manager or vendor for these products. But it's an ops business that has a technology backbone, is how I would put it. So the products that they make is things like aggregates, concrete, steel, cement, etc., etc. What is interesting is they have moved from using, just say you can go and source steel from JSW Steel if you want it, or you can go to a small steel plant that has excess capacity and get that steel manufactured for you. You can think of it like a private label, where you will actually have better margins than if you were to get say JSW Steel. So they have moved from almost hardly any of this manufacturing, almost close to zero of this 3 years ago, to about 35% of what they sell today is this manufactured private, let me call it private label steel, which is good for margins. They've also moved to slightly higher complexity products like these aggregates and concrete and so on over the last year. So you can see that steady improvement. They've got a decent list of clients. Some of them are these public companies. I mentioned Afcons, EMS, Capacity Infra projects, and so on. But I would say the number of active customers in the last 3 years is more or less flat. So there's something that is missing. And even if you look at their numbers, they're kind of thanda in my view. There's been no growth in the last 3 years. They've said that this is because they're moving to higher margin products, which is visible in the P&L. But even that, they're just about break even. I think 9 months they've done about 40 crore EBITDA, some hardly few crores of PAT, 6 crore of PAT or something. Even if I take aside PAT, which is probably not super relevant. So I was just trying to see how to value this company and see if this company is coming at a fair valuation or not. Like you mentioned, they're coming at an 1,800 crore market cap. They will do probably around 750 crore of top line for this year based on the 9-month number. This company is coming at 2.5 times sales for this year and 32 times EBITDA for this year. Even if, okay, let me leave aside the projections or what I think they might do next year. For a B2B kind of business, I've seen B2B e-commerce companies over the last several years. In like peak bull markets, these companies would get maybe 3 times of sales. When I say sales, I mean the GMV that the platforms would pass through the business. Today, if you look at something like an infra market and off business, these guys both did recent pre-IPO rounds. Both did it at around 1.3 to 1.5 times the sales of, FY25, while Aris is asking for 2.5 times, which I don't understand. The EBITDA is about 32 times. I believe infra market is coming at whatever is happening. Transactions are happening at 25 times or so. So the valuation is like, I'm not understanding what is so special about this company that has shown no growth in the last 3 years to come at this kind of a multiple when there are other peers, larger peers, more track record coming at least in private markets and in pre-IPO markets at much lower valuations. Even SG Mart, which is a somewhat similar business, it trades at less than 1 time sales and trades at 20 odd times EBITDA. So I couldn't quite figure out why. Otherwise, the company sector all looked okay. The promoters also seemed decent, though he was not your typical technocrat startup type founder, more someone from the construction industry. But I just couldn't get the valuation. The pre-IPO, one other thing I'll add is the pre-IPO is very strong. They raised some 80 crore from Vanajayar, from Mukul Agarwal, Singularity, which is Madhu Kela's fund. But I'm also hearing that the anchors have not been as easy to fill. So it'll be very interesting to see the anchor list when it comes in a few days. That will also, shed some light on this. For me, as of now, this looks like a skip to me. Let's see if there's some new information, some interviews, for example, in the next few days that will show up as the IPO nears. But as of now, to me, this looks like a skip, and the lack of growth and the valuations don't quite. So if they had come at, 20% discount, 25% discount, I think it would have been more palatable. But at these numbers, it feels like it's pricing in a lot of FY26 also. It's not really trading at FY25. It's trading at some FY27, FY28 kind of number. So I am for me, this is inherently a skip. And I think infra market also will come quite fast. By the time this company grows into that valuation, infra market also will most likely hit the bourses. So that could be a better play.
Got it. Thanks. Thanks, Rohit. A question है मेरा इस पे. I'm not sure if you have seen this, but do you know where the pre-IPO was at and how long back was it? Like, was it at a substantial discount to the current price or was it around the
Same,
same
same,
number?
same price. It was done at the same price. I think it was done at 222 only. It was done in January. So it's been around 6 months. That also I've
Okay.
heard a lot of things about. I don't want to say it here, but I've heard some
No,
things about that pre-IPO.
yeah,
Yeah,
I have also heard about it, but we'll keep it to ourselves.
yeah, it's
But
not.
yeah,
Yeah,
so pre-IPO was done 6 months ago at the similar valuation, which is like
yeah,
2.5
yeah,
times.
same. Exact
Got
same
it.
price. It was done at 222.
Got it. So, आप कह रहे हो कि जैसे 700 करोड़ का इनका रेवेन्यू है जो इस साल का, that is essentially selling of these steel bars, etc. Their margin would probably be whatever 2%, 3%, something like that, whatever what they keep.
Yeah, they have a 15% gross margin, 15% gross margin overall. And their EBITDA is, I think, 7-8%, 8% or so for the 9 months. So they do, I mean, it's not just the margin of the product, but of course they do the logistics and so they'll have to keep, gap for all of those costs as well. Management, logistics, billing, paperwork, whatever, everything that they do. But yes, it is effectively they buy a steel bar for $1,000 and sell it for $1,100. They recognize 1100 as the revenue, not like they recognize 100 rupees as the revenue, which is
Got
how
it.
typically technology
And
platforms would.
logistics, etc. is not like done by a different company, or even if they sublet it, they just put the cost of subletting in their books.
Yes, yes, yes. They'll
Got
use
it.
they'll use vendors only mostly, but they will have some technology at the back to understand, where is the delivery right now, to know how long it will take, to just manage the back end of it.
Got it. Understood. So yeah, I had also not read much about the company, but it seems that it is pretty heavily valued. So hasn't left a lot of comfort, at least at this moment of time. So it seems I'll also be skipping the company, and that is what the review I had also got earlier was as well. Now moving to one last company, we'll also talk about Influx Healthcare today. So Influx Healthcare, the company was incorporated in September 2020 and is a healthcare focused company specializing in contract manufacturing. Its product portfolio includes tablets, capsules, powders, liquid orals, and soft gels. Just setting up the IPO. It's a 58.5 crore IPO, out of which 48 crores is a fresh issue and 10.5 crores is a OFS. So, and they are coming at a market cap of 222 crores. So the promoters diluting like again 25, 26, 28%, something like that. In terms of the FY25 financials की अगर बात करूं तो कंपनी ने जो रेवेन्यू किया है वो 105 करोड़ रेवेन्यू किया है कंपनी ने, and then the PAT is 13.37 crores. So they're coming at like 16 PE, 16 के PE पे आ रही है. And in terms of the LM is Rare Ever Financial, and this is like their first IPO, and they don't have a track record before this. So it would be interesting. But this LM seems to be connected to another LM as well, which right now is not working in the market. We'll come to it when we talk about it. But yeah, just setting up the IPO and starting to talk about it. Before I do that, just want to highlight again, because I see that there are a few questions with respect to has the monolithic review been done? It's been done. If you have missed it, I will post this space hopefully by tonight itself on our YouTube channel, the link to which is in the pinned comments. Definitely go ahead and follow the YouTube channel as well. We are close to 5,000 subscribers. So if you can share it with your friends and help us reach there this week, that would be super helpful. It just encourages us to continue to post these. But having said that, let me talk about Influx Pharma. So जैसा मैंने बताया, Influx Pharma is a CDMO. अभी CDMO की थीम बहुत चल रही है. So basically, company like CDMO basically stands for contract design and manufacturing. So D part I feel is slightly is a very specialized skill, but I will put it more in the categories of CMOs, where it's like kind of manufactures the nutraceuticals and pharmaceuticals per se for different clients. इसके ना 3 फैसिलिटीज हैं 10,000 स्क्वायर फीट ऑड की जिसमें ये कंप्लीट करेंटली प्रोडक्शन करता है एंड कंपनी मेनली ना अलाइड प्रोडक्ट्स अलाइड फार्मास्यूटिकल्स का प्रोडक्ट यूज बनाती है एंड दीज आर लाइक लेट्स अंडरस्टैंड कि फार्मास्यूटिकल्स और न्यूट्रोस्यूटिकल्स में क्या फर्क है. सो जैसे हम सीडीएमओ बोलते हैं तो हम क्या सोचते हैं कि दवाइयां बनाती है कंपनी. सो जो दवाइयां हैं दैट कैन ईदर बी फार्मास्यूटिकल्स और न्यूट्रोस्यूटिकल्स, राइट. फार्मास्यूटिकल्स आर like formulation based, chemical formulations based, which are used in, let's say, diseases, etc. Nutraceuticals are nutrient pharmaceuticals, so these are more like minerals, iron, vitamins, etc. उनकी जो deficiency के लिए drugs use होते हैं ना, that is something which fall in the nutraceutical category. So this company makes like 90% of their revenue comes from nutraceuticals, and then some like minuscule revenue comes from cosmetic products manufacturing and veterinary part of the part of their. So cosmetics forms 6%, Ayurvedic forms 3%, and veterinary forms 1%. But 90% is nutraceuticals. And think of it like कि majorly ये लोग क्या करते हैं, vitamins, minerals की जो capsules होते हैं, protein powder जो होते हैं, तो ये जो कंपनियां बनाती हैं जिसको हम जैसे खरीदते हैं. सो मसल ब्लेज लाइक is a protein powder company which comes to a mind of a lot of people. Now, Muscle Blaze is not its client, but think of it this way कि वो ना एक marketing company है. जैसे मामा अर्थ हो गया बड़े लेवल पे, तो मामा अर्थ is also a marketing company. उनके लिए कोई manufacture कर रहा है, right? Like Mama Earth is in cosmetics, Muscle Blaze is in protein and nutraceutical sort of a category. So उनके लिए जो manufacture कर रहा है, this company is one of them. Like again, want to repeat that they might not like this, they might or might not be their client. That's not mentioned as such, but yeah, ऐसे कंपनियों के लिए B2B मैन्युफैक्चर करते हैं is what the company does at a high level. And if I look at their efficient capacity right now, so they are already at their almost at their max capacity. तो इनका जो पहला प्लांट है जो न्यूट्रोसिटिकल का है वो 93% कैपेसिटी पे ऑलरेडी ऑपरेट कर रहा है. कॉस्मेटिक्स और पैट वाले तो छोटे छोटे प्लांट्स हैं पर वो भी ऑलरेडी 90% पे ऑपरेट कर रहे हैं. बट प्रमोटर्स का कहना ये था एंड जो नया कैपेक्स, तो पहले मैं बात करता हूँ कि ये कंपनी रेस क्यों कर रही है पैसे. सो दे आर ब्रिंगिंग देयर आईपीओ, एज आई सेड इट्स अ 58 करोड़ आईपीओ, आउट ऑफ विच 48 करोड़ ही फ्रेश इशू है. तो 10-10.5 करोड़ तो प्रमोटर के पास चले गए एज ही वांट्स टू कैश आउट सम पार्ट ऑफ हिज वॉट एवर हार्ड वर्क ही हैज पुट इट इन द बिजनेस, विच मेक्स सेंस. अब जो 48 करोड़ का है उसमें से दे आर डूइंग कैपेक्स फॉर सेटिंग अप अ न्यू मैन्युफैक्चरिंग फैसिलिटी फॉर न्यूट्रोसिटिकल डिवीजन ऑफ 22 करोड़. एंड देन फॉर वेटरनरी फूड के लिए भी ये कैपेक्स कर रहे हैं वेयर दे विल पुट इन 12 करोड़. एंड देन इनको अपनी कॉस्मेटिक डिवीजन के लिए मशीनरी वगैरह खरीदनी है जिसके लिए इनको 3 करोड़ चाहिए. एंड देन द रेस्ट इज फॉर जीसीपी. सो ऑन पर लाइक एट अ हाई लेवल एवरीथिंग लुक्स वेल इन टर्म्स ऑफ लाइक वेयर दे आर स्पेंडिंग देयर मनी. द कंपनी like knows and understands what it wants to do and also wants to just go ahead and execute that. In terms of the promoter also, there have been quite a few interactions of the promoter online available. I would urge you to also go and look at them. The promoter seems sorted and understands what he has been doing, especially because this is a rather young company. It was started in 2020. So just been 5 years since the company started. And the growth that the company has done is kind of commendable to be able to grow from there. Most of their sales is coming from like let's say Maharashtra and Gujarat, and there are hardly any exports. But the promoter also mentioned that that's also because they export through intermediaries, तो इसलिए वो books पे नहीं दिखता है. And said that I was talking about how their capacity right now is kind of capped. बट एक इंटरव्यू में उन्होंने ये भी बोला कि दे हैव डन सम एडिशनल कैपेसिटी राइट नाउ, लाइक दे हैव ग्रोन देयर कैपेसिटी इन न्यूट्रोसिटिकल टू लाइक 30%, which should help in this year itself because the current capacity which is shown in RHP that goes live only in the FY27, so it still has time. Like उस वाली कैपेसिटी को आने में अभी भी टाइम है और जो अभी वाली कैपेसिटी, जो जो एडिशनल 30% कैपेसिटी है, उसका कहीं आरएचपी में मेंशन नहीं है, बट द प्रमोटर इन द इंटरव्यू सेड दैट दैट्स फ्रॉम इंटरनल अप्रूवल, सो डजंट नीड टू बी मेंशन इन आरएचपी. सो द कंपनी हैज रनवे टू बी एबल टू ग्रो, क्योंकि उन्होंने इंटरनल कैपेसिटी ऑलरेडी बढ़ा दी है अभी. Having said that, let me talk about the guidance. So the promoter has given a guidance. पहले मैं revenue की बात कर लेता हूँ कि एक बार कंपनी ने क्या किया है. So in FY23 they did 76 crores of top line and like 7 crores of bottom line. उसके बाद ये FY24 में ये नंबर हो गया जंप हो गया 100 crores और bottom line went up to 11 crores. And FY25 में the revenue went up to 105 from 100, which seems very low, right? Just 5% jump. And bottom line went up to 13 crores. इसमें promoter का ये कहना था कि that is because their packaging division had a choke, or the like that उसमें उनके पास raw material नहीं था, some choke there, because of which their revenue couldn't increase as much as it should have. And the promoter gave a guidance on record in a video of 200 crores this year, which shows a great jump from last year, at least on paper. That's what the promoter is saying. And then the promoter also said that the company would go ahead and be, if it is able to achieve its full capacity utilization and is able to sell, then that should be able to do like 500 crores of top line, which should, and that should be possible in the next 3 years per se. So there, the company is gunning for really good growth, which from what I have seen in SME markets has done, like, is something which people really value, because people have like growth hungry and they want to invest in businesses which are growing at 60%, 70% growth levels. So that's something which is interesting to see, that the company is guiding for a very heavy top line in FY25 as well as coming years as well. Just two risks which I feel. One risk, they currently do nutraceuticals. 90% is nutraceuticals, which I feel end of the day is a lower बैरियर टू एंट्री मार्केट, क्योंकि न्यूट्रोसिटिकल्स में क्या होता है, वो जो एफडीआई रेगुलेशंस वगैरह नहीं लगती हैं, एफएसएसएआई रेगुलेशंस वगैरह लगती हैं फ्रॉम माय अंडरस्टैंडिंग. सो इट विल ऑलवेज हैव अ लोअर बैरियर टू एंट्री, एंड इफ यू आर अ B2C you will always make a killing. But on B2B part, I'm not sure कितना मार्जिन पास ऑन होता है, और अगर अभी होता है तो क्या आगे भी होता रहेगा, बिकॉज देयर विल बी अ लॉट ऑफ प्लेयर्स हु कैन do this contract manufacturing for nutraceuticals, right? Because it's end of the day, it's a very ops heavy execution business ki wo banate jana hai on repeat. So I feel that the margins can get squeezed, and they will, even in the CDMO theme, they would get squeezed a lot more easier in nutraceuticals than in pharmaceuticals, and especially for CMOs जो मैन्युफैक्चरिंग करते हैं, सिर्फ डिजाइन नहीं करते हैं. आई कुड सी कि इनने लिखा है कि ये डिजाइनिंग में भी हेल्प करते हैं, but I couldn't understand at this moment of time how much of it is actually something which they are able to do right now. So that's one risk. The second risk, and it's not really a risk, but market, like SME market doesn't like pharmaceutical companies. Pharma companies don't list well on and don't do well on SME board from my experience of like last 2 years. One best example of this is Quest Labs, which they have also shown as a peer. It's at like 10 PE right now. But I understand that's also because their growth was constrained. And also कि उसमें promoter had, there were some notices with respect to their lab being like getting notices for audit, and they failing that audit. So it has some of that risk as well. So I will not look Quest as a peer, honestly, because Quest is at 10. This guy is coming in at 16. So if I can just badge this company saying कि यार ये खुद ही बोल रहा है इसका peer 10 पे, तो मैं इसको 16 क्यों दूं? उसका मुझे लगता है कि ग्रोथ वाला रीजन है, प्लस वो ऑडिट फेल करने वाला रीजन है. आई वुड काइंड ऑफ गिव दिस अ हायर मल्टीपल, एंड स्पेशली बिकॉज this company, the promoter seems like pretty engaged and has big growth plans. I feel that it should do well. So I'll be applying to this IPO. If allotted, I'll hold it as well. And like, let's see how much listing gains if there are, but at least at this 15, 16 PE, if it is able to achieve like even 60% of what it is saying, it should do well in the long term. So I will be holding to this company. I'm fairly confident on the IPO price for this company. Although I want to highlight again the two, three risks. It's a nutraceuticals, a segment which would get like pressure for margin faster. Second, the peers or the SME market doesn't like pharmaceuticals. And third, the capex which is coming is slightly longish, but then they have done some internal capex to be able to cover up for FY26. That's my very high level read of Influx Pharma. Uh, Rohit, I know you had also listened to a couple of from interviews. Did I miss anything, or is there anything that you would want to add?
I think one thing, a couple of things on the margin point, they did clarify and they did feel that the margin was sustainable and actually also had a chance to grow because they are trying to expand in the cosmeceuticals. So basically cosmetics could be, say you're applying a face cream, that is a cosmetic. A cosmeceutical is a face cream with some serum, something that helps with acne, things like that. And again, those are formulation based, little bit more complex products. And cosmetics in general is an extremely high margin business. And even in the interview, he mentioned that in cosmeceuticals, he should get a 50% plus kind of gross margin. So that margin is a very powerful margin, I feel. In nutraceuticals, he said he can do 35% plus gross margin, which is also pretty solid, which is why he has such healthy EBITDA and PAT. So that was one thing he clarified. Now what will play out, let's see, but he did talk about this. And I think one question I had, since you mentioned 200 crore growth, I don't think the capex that he's adding is that high with his internal accruals to get him to double. So I'm not sure if he's at 90 already in Nutra and he's adding another 30-40%, how that will get him to 100, from 100 to 200. So that is one question. I don't know if he's being over aggressive. That's something even I'll try and find out in the next couple of days when I read this company. Otherwise, I don't think we should compare this with Quest. I really think Quest is severely undervalued for whatever it is. I don't know why there are some companies where there is visibility, and I'm not talking about Quest in general, but the overall market where in SME you have companies that trade at 8, 9, 10 times despite showing decent numbers and showing some decent chance of forward growth. So let's leave Quest as a bit of an outlier. I think even Zenith Drugs trades at 15 times. And they just make very basic OTC medications, gummies and so on, which is like the most generic sort of drugs. Whereas I still think something like nutraceuticals is a little bit more unique, and it's a very new market that is growing very fast, versus maybe one thing with that core pharma is that grows at a very slow sort of pace as an industry. So I still feel this segment should get a better number and a better valuation. So I feel 16x is very fair, very reasonable. Will definitely also apply for it. Interestingly, there's this, recently I've been seeing in some of these WhatsApp group, people keep sending this ET Now has this, the Hindi ET Now channel they do SME reviews, which are very funny. And they do review themselves, they get one expert and they'll spend 30 seconds on each company and they will just tell the most stupid things, working capital negative, whatever, cash flow negative, some supplier consent. They'll just take the top 2-3 risks, just highlight that, and they will say, avoid. Interestingly, this, in fact, for Monolithisch, they had called it an EPC company and said avoid. So that shows how pathetic the actual underlying research is. But this company, of all companies, they actually gave it an apply rating, which was surprising. But they actually said this is the first SME that they've seen in a long time where they feel there is, something fundamental where they can apply. So maybe the broader market will also like this and like this company, and there could be some interest here.
That's helpful. Thank you, Rohit. And wo ET now wala to I kind of skip because it just kind of tells you that there are always agendas, and I would say same with us as well because we have biases. Like some would have less, some would have higher, and it is just visible at a few period of time. We try and keep it as unbiased as possible. On that note, we have Chintan with us who wanted to clarify a couple of doubts. I'm just trying to add him. Chintan, are you in? Can you try and speak if you are in? Doesn't seem so. If he's in, I'll try and add him. But yeah, that is what our reviews was for four of these companies. I would be applying to Influx. I don't feel a lot of risk at IPO price. We'll see how it kind of grows from there. But as Rohit also mentioned, that the 100% growth in FY26, the promoter doesn't seem to have that much of CapEx, at least from our reading, can be wrong. So we'll see how we want to look at that. But yeah, that is what our read was of Influx. What we'll do is tomorrow we'll come back and we'll talk about two SMEs for sure, which is Appleton and Bartle Automation. Both of them are very interesting and very diverse views on one of them. We'll also try and see if we want to cover Samay project and Ethan papers. Ideally, we didn't want to do them because they're just too small or the segment just not exciting. But since we just have these two and we have covered four today, we might as well cover them tomorrow as well. We'll see how we want to do. But that is what our review is for four companies we covered. I just want to highlight if you join towards the end, uh, please make sure that you join the YouTube channel as well, and we will post this space there towards the later half of the day, hopefully today itself. I'm just trying to see if I can still add Chintan. Well, he's saying he has sent a request. I can't see it. I have sent it from my YouTube, from my laptop, but he's not there. Let me see if he's still there. Okay, so it seems that there's some technical glitch today. Maybe what we'll do is, if Chintan Bhai has some time tomorrow, we'll try and add him as well to try and do a recap of Influx. If not, we'll leave it at that. But yeah, thank you so much everyone for joining. Have a good day ahead. Thank you.
Thanks,
Bye.
everyone.